Okay. Okay, so I said we're gonna go over MULN first. Let's do that. So let's take okay, day trader chart, reset, 57. Okay, let's take
Hey
a,
James, is a Nimoy set to this dark background, or is there a way to change that?
so if you go to, like, let's say day trader, for example, you won't have dark background. Like if you do this, if you go to stocks, I think stocks are set to dark background, but there's going to be a toggle coming soon where you could toggle like light mode or dark mode right here.
Awesome, dude. Thanks.
Yeah, you got it. Which do you like better, dark mode or light mode?
Neither. I just wish the velocities would stick.
Yeah, I agree with you.
Yeah, but no, dude. I think that. Oh man, you know what? I think with the light mode, the velocities are easier to like hit with a mouse. But that's just me.
Okay, I hear that. For me, I kind of like the dark mode better. It's like a smoother look for me. I don't know, can't explain it. Like I'm just very used to trading view, I guess. So this just, matches with that.
Yeah, I guess just with the hourly trigger being purple, it's easier just the contrast with the white. But
That for sure. Yeah, that's definite. Okay, so let's take a look here. So one thing we got to point out right off the bat is we had the hourly trigger, daily trigger cross right here, and we were expecting right after this cross happened, price was 51 at the time. We were expecting a pullback to at least the hourly trigger, if not even the daily trigger, before continuing upwards to attack the weekly trigger at 128, which is still the target. Right, nothing's changed about that. What we had instead was sort of like a Elliott wave running correction where price basically moves sideways. So in last night's stream, I explained a couple of times that, if you don't have that strong counter trend move back down all the way to the hourly trigger or daily trigger, it's really bullish in nature. It means that the stock is so strong it can't even be brought back down to the hourly trigger. Because the truth is 9 times out of 10 times, when you have this trigger cross, you're going to get a move back down to the hourly trigger without a question of a doubt. And so we did have a tell here into this high. So price was 0.51 here when we made this extreme print. And then when price moved to 0.55, the velocity was, this is your first bearish divergence. So it's not like this move down came as like an extreme surprise. But, on the bright side, we were expecting a move all the way back down to the hourly trigger, and we didn't even get there. So everything about that just tells me MULN is still extremely bullish, and I definitely expect this stock to start taking off any day now and just straight up fill this air pocket all the way to 128. So MULN, I did cut 20% of my calls today at 500% to take back all of my original capital, but the rest of it I'm long. I've got a long time, so I'm not too worried. This is pretty nice to see that on this push higher, the 5-minute velocity agreed. So over here we registered a print of 0.007, and when price made this new high, we had 0.0079. So that's great. 5-minute velocity is agreeing with this push up, and so even when you have this pullback, you just want to buy anything close to the hourly trigger. So that's MULN. MULN's still bullish. Price target is the weekly trigger at 128. Every week before it hits, it'll go down a couple of cents. Let's look at BBBY. And then, by the way, I'm going to get into the day trader section today for GME and BBBY and AMC and how we're able to spot the tops for all of them. But BBBY, just like we explained yesterday, bring back the daily velocity for anybody that missed it. So here is your most extreme print to the downside, and then price made its first new low right here. That's your first bullish divergence because velocity did not make a new print to the downside. And then over here, that's your second bullish divergence. And then last night, I said that as price is coming down here, we have the advantage of knowing that this is your third Nimoy bullish divergence. And so that means price wants to snap back immediately towards this daily trigger. And so today, MULN went up 28%. You could see what happened as soon as it made that low. On your third bullish divergence, price immediately wanted to attack the daily trigger, which is now $6. If you take a look at the hourly velocity, So let's look at this move up. So you can see as price came up into this high, the hourly velocity already diverged. Now, I don't like that per se. This is why I exited my calls for BBBY. Now, I'm not saying that it won't get to the daily trigger. It very much can. But for call-wise, so let's go to the day trader chart. So, we know we have 3 bullish divergences. So we know price wants to attack the daily trigger. Now, if price truly wanted to go straight to the daily trigger, then on the way up, there wouldn't be any bearish divergences. It would just be with each consecutive high that price puts in. So over here, the high was 553. Your velocity was 0.02 at the time. And then you had a higher print. Price didn't make a new high. And then over here is your, okay, actually I may have read this wrong. All right, so I thought that this high came in this hour. And if this high came during this hour, then this is gonna be, oh no, this wasn't a new high? I'm so confused. What? Because it's registering here as a new high, 533. All right, give me a second to figure this out. Okay, to remove some of the noise. All right, so the day trader chart does look slightly different than the 6-month chart. Right, because over here, 533 and hourly velo is 0.04, and then 541 and hourly velo is 0.042. So I'm just confused right here. Oh, okay, I know. So because price went up and down so fast, it doesn't register on the 6-month time frame because it goes by closing price of the hour. And here price just came up and came right back down. So no, there isn't really any bearish divergences here. Let's take a look at the 5-minute. Yeah, because price never ended up making a new high. Okay, so that was my mistake. I mean, I don't mind because I bought them down here, right off the open at about 430, and I sold them at about like 529, I think. So it's still a really good play. I guess, BBBY probably can continue to the daily trigger, but if you're in those calls that we took yesterday, what I would do is I would use your 5-minute trigger as your stop loss, which is at 526. Once price goes below the 5-minute trigger and then the 1-minute trigger crosses below the 5-minute trigger, that means price usually wants to revisit the hourly trigger, which is back down to 486. I wouldn't want to sit through that. So on any move below 526, that's when I would consider, unless you're willing to give it time. I mean, it could pull back to the hourly trigger tomorrow. If price breaks below the 5-minute trigger and the 1-minute trigger crosses down, we could see BBBY go back to the hourly trigger at 46. It'll still be a really strong buy at the hourly trigger because, as we just saw, there was no hourly divergences on this move up, which means that the hourly trigger is going to be really strong if price comes down to test it. Okay, now what I really wanted to get into today was how we timed the exact top and how you guys could time the exact top of this run today. Okay, so right off the bat, I mean, any of you can tell me what this is in 2 seconds. I mean, we all know this setup very well. So the 1-minute trigger and the 5-minute trigger and the hourly trigger are clustered together all within 1% of each other. Whenever these 3 triggers are clustered within 1% of each other and price breaks either upwards or downwards through them, we call that a 3-trigger cluster setup, and those usually lead to strong, powerful moves. So price came up, and just to make something clear, this was the daily trigger. Okay, so when price rejected right here, it was rejecting the daily trigger. Daily trigger was at 26.26. But let's zoom in at this time period for a second. Okay, so 1-minute velocity, there was no divergences into the daily trigger, right? So let's go back here for a second so we're all on the same page. We could see that the daily velocity was negative going into the day. All right, you see how price broke through the daily trigger, but there was negative daily velocity. So we want to know, is the daily trigger going to provide resistance, or will price be able to break above? If there's bearish 1 minute velocity divergences as price is attacking 26.26, why isn't this working? If as price is attacking this key level, right, 26.26, the daily trigger, if there's 1 minute divergences, then you're automatically going to have a rejection. But because with each consecutive high that GME put in, so here's your first break, here's your second one, higher velocity, here's your third one, stronger velocity, here's your fourth one, stronger velocity, here's your fifth one, that tells you that Nimoy thinks that this move is strong enough to break right through the daily trigger. Let's see if the 5 minute velocity agrees. So again, with the 5 minute velocity, you can see with each push up, 5 minute velocity agreed. With each high, 5 minute velocity also printed a new high. So this was our key sign today, that the daily trigger was not going to provide resistance and that the move up was strong enough. And again, it was coming from a 3 trigger cluster. So that was another clue that price was going to be able to break through the daily trigger even with negative daily velocity. But now let's take a look at this entire move up. Okay, so first let's start with the 1 minute. Obviously, everybody can see that this is your most extreme print. Okay, so when price was at 26.57, your most extreme print came at the 1 minute velocity was 0.79 cents. It's 0.079, but let's just call it 79 cents for simplicity. Okay, and price is 26.57. Over here, price comes up to 26.63. This is your first new high. And we can see the 1 minute velocity is 44 cents. So this is clearly divergence on the 1 minute. Now, after 3 divergences, price tends to reverse back down. Then price comes up and makes a new high, 27.49. If you look at the 1 minute velocity, this is also clear bearish divergence. So 1, 2 bearish divergences on the 1 minute. Over here, when price makes its third high, all right, you can see clearly that the 1 minute velocity is nowhere near as strong as here. That's 3 bearish divergences, and that tells you that price wants to reverse back down. Now, granted, there was still really good hourly velocity. So it's not telling us that price wants to come crashing back down to the hourly trigger, but it is telling us that price wants to cool off, at least consolidate, but at the very minimum, pull back to the 1 minute trigger. Now let's take a look at the 5 minute. So here was your most extreme print to the upside. Price was 26.57, and your 5 minute velocity reading was, we're going to call that 11 cents. All right, 0.11. Price makes a new high right here, 26.63. 5 minute velocity is 0.81 cents. All right, so this is clear bearish divergence. New high, 27.49. 5 minute velocity is 0.096. So 1 bearish divergence, 2 bearish divergence, and into this new high, that's your third bearish divergence on GME. So what that tells you is that price wants to at least pull back to the 5 minute trigger. It's not telling you that price wants to reverse and become bearish again, because the hourly velocity, once again, is still really nice and strong to the upside. There's no need to think that price is just going to come tumbling back down to the hourly trigger. But there is a reason to think that price is going to come back down to the 5 minute trigger, because when you have 5 minute divergences, price wants to come back down and reverse to the 5 minute trigger. So if we're buying calls on this beautiful 3 trigger cluster setup, when do we want to get out of them? You know, especially if they're close dated calls. So for all you guys watching this live, all you're looking for is your 3 bearish divergences. If you were watching this live, you could have easily caught it on the 1 minute. All right, here was your most extreme print. So you knew you're looking for 3 new highs after 26.57. Here was your first high, here was your second high, and here was your third high. Okay, and we have the same thing on the 5 minute. 3 new highs after 26.57. If 5 minute velocity cannot get above this, that means it's going to revert back down to the 5 minute trigger. So here's your first high, here's your second high, and here's your third high. Once you already have these 2 highs in your mind, if you're using the Nimoy, right? If you're using a Nimoy, the way I trade is what I'm thinking in my head. Okay, I see the most extreme print. All right, this is very obvious, and I know the price that came during this extreme print, and I'm just saying to myself, if there's 3 new highs, well, 2 things. One, if price breaks below the 1 minute trigger, I'll sell. But 2, if there's 3 new highs and velocity cannot exceed 0.111, I'm out of the trade. So here was my first new high, here is my second new high, and here's your third new high, and that's it. You're out of the trade just like that. If you want to buy back on an airplane setup, you're more than welcome to. There was no airplane setup that really presented itself today. The 1 minute trigger did cross back above the 5, so this could have been a good entry. And if we zoom in here, again, you can see the same thing. After the 1 minute trigger crossed the 5, right? You have your most extreme print right here, and then you have a new high 1 bearish divergence, new high 2 bearish divergence, and a new high 3 bearish divergences. Okay, now this is how, if you're playing weeklies, all right, if you're taking weekly call options, if you're taking a month out, you don't need to look at the 1 minute and the 5 minute velocity necessarily. You're above the hourly trigger, you have good hourly velocity, you could chill in your position, you're most likely going to make money. But if you're playing weeklies, the way to maximize your reward per risk is you take calls on, entries like this, 3 trigger cluster setups, and you sell them after either price breaks below the 1 minute trigger, so you would have sold right here, but you also could have got the top because you knew before price even made this move up that this was going to be your third bearish divergence. That's how you could have got out. If we look at AMC, we're going to have the exact same setup. And it'll just help you understand how cleanly this works and how well this works. So here was your 3 trigger cluster setup at about 6:30. So you knew we're going to be bullish. And if you take a look at the 1 minute velocity, here was your most extreme print. Price was 679. Here price came up to 679. So you could already count this as 1, even though it's not necessarily a new high, but it's the same high. And then here's 2, and then here's 3. And this tells you price wants to at least reverse back down to the 1 minute trigger. If we're looking at the 5 minute velocity, we have the same thing. Here's your most extreme print, and then you have 1, 2, 3. So again, in your minds, you have to be thinking like this. As soon as you see your most extreme print right here, okay, and then you see 1 new high, all right, you don't need to sell yet, especially because you're above all 3 triggers. But after you make this second high, all right, 694, in your mind, you must be thinking, as soon as price makes a new high, if velocity is not greater than this, and you know it won't be just based on how price is moving, even before it actually prints, you're out of the trade, all right? So I think this can help you significantly with your entries and exits. And sometimes I'm watching too many things. I can't necessarily alert it at the minute. Like today I was watching literally just hundreds of things. It was really hard for me to alert exits on GME while watching BBBY, while watching AMC, while watching the Disky page, SPY, INTC, NVIDIA, Tesla. So again, this chart is completely free. You can view this chart for free. If you're in weeklies and you took my entry, just watch the velocity. All right, it should be pretty clear from the way I just explained it. What else did I want to discuss? Okay, and then just real quick, AMC, it got really close to this daily trigger, which I said in the stream yesterday that I did expect it to hit the daily trigger, but it rejected early, which is a little unusual. I'm not exactly sure why that happened, but the daily velocity still continues to get better and repair itself, the negative daily velocity. You can see how strong it was repairing itself throughout this entire move. And so a move above the daily trigger for AMC will likely bring an attack of the weekly trigger, which is currently at 829. So that's a really nice move to play, $7 to 829. So we'll keep an eye on AMC if it can break above the daily trigger. For GME, GME is actually the first of the 3-headed meme stocks to break above the daily trigger. So a lot of times I'll use that to, tell me that AMC and BBBY will probably break above as well. So what we all need to be watching for GME right now to get optimal entry on long calls. If you're long right now, you can use like the daily trigger as your stop loss if you want. You could use the hourly trigger, you could use a 5-minute trigger, whatever your preference is. But if we're going to really be bullish and we're going to explode to the upside, then we have to have the hourly trigger cross the daily trigger. So if this happens, Well, right now we have positive daily velocity. Okay, so this tells us that if price comes crashing back down to the daily trigger tomorrow, which is at 26.31, price wants to at least pin at the trigger. Even if it falls down, at least it wants to pin there. It'll give you a lot of time. It'll give you a little cushion. It won't just go straight through and straight down. And even if price does break below the daily trigger, we still have the hourly trigger, which will be climbing up. So this looks really good per GME, as in I don't think it'll completely break down here. One more day above the daily trigger would help us with right now the daily velocity is only 0.043, which isn't too impressive. You can see these prints are like, what's this one? 0.16, 0.17, 0.15. If we have positive velocity, 0.15 for GME, we're going to move really strong and fast. Right now it's only measly positive. So, if we do get the hourly trigger crossing the daily trigger, which I believe has a very big likelihood of happening, and we get a counter trend move back down, we can ride this thing from like 26.30 to the monthly trigger, and the entire move will probably happen in less than a week. So once we have the hourly trigger cross and the counter trend move back down, usually get a really sharp, powerful move up to the monthly trigger, which is at $30. I don't think we'll be able to break above that yet, but the good news is that the weekly velocity has been getting better for 5 weeks already. So 1, 2, 3, 4, 5. Today is Tuesday. If we can close in this upper range, right? So if this entire thing can happen this week, it changes the entire macro outlook of GME. So you have to understand that we're nearing the end of the month, okay? It's the 26th of October today. So in 4 more days, we have a chance to turn one of the ugliest prints that GME has ever had, one of the ugliest monthly prints that GME has ever had. We can revert this entire monthly velocity by closing close to 29.98. All right, the closer we close to the monthly trigger, we can revert this entire negative monthly velocity. We can even turn positive monthly velocity for the next month. So there's never been a more important time for GME than these next 5 days. All right, so Wednesday, Thursday, Friday, Monday, Monday. So the next 4 trading days. So the most perfect scenario, we need to see something like this, okay? First, we need the hourly trigger to cross above the daily trigger. All right, that's most important. If that could happen by like tomorrow or Thursday, excellent. Friday, we need to have a really strong push up. Now, if we have a strong push up on Friday, we can also very much repair the weekly velocity. And the weekly velocity will go from being very negative to only slightly negative. So if they're able to stop this thing from turning bullish for the month of November, they need to fight these next couple of days, because if price keeps moving up towards the weekly trigger, which is at 30.63, if price moves up to 30 this week, they're going to be, whoever's short this stock is really going to be in trouble, because the negative weekly velocity will be marginal, negligible. It'll be very, very small, something like this, The monthly velocity will maybe even flip positive, if not be very, very, very negligible. Again, similar to something like this, where price can pretty much just move straight through the monthly trigger. And the best part is, if price can move above these, then we're going to end up with a weekly trigger, monthly trigger airplane, which, as far as I know, is one of the most powerful setups in an EMOI. Which is you have the weekly trigger coming down towards the monthly trigger and then reverting back up. And, that can start a really long-term bull trend for GME. So if you're a long-term holder of GME, these next 4 days are absolutely crucial. So it'll be very interesting to see how this plays out. So again, one more time, we want the hourly trigger to cross above the daily trigger. We want to have a counter trend move back down. That's going to be the best entry for calls. And then we want this thing to fly to 29.28, right in this area by the end of this week or Monday. And that will change the entire macro outlook of GME. Because right now, if you look at this, there's a strong bearish case as well. The bearish case is the monthly velocity is nasty. The weekly velocity is also pretty nasty. And that the weekly trigger might be about to cross down to the monthly trigger. But with a $3 push up for GME, literally $3 push up within the next 4 trading days, the entire macro outlook changes, because now instead of having a nasty monthly velocity print, you have barely negative, if not positive, and instead of having nasty weekly velocity, you have barely negative weekly velocity, if not positive, and you end up with a weekly trigger, monthly trigger airplane. So I'm really excited to see how this plays out. Worst case scenario, we come back down and we get a bad monthly print, and that means we're probably going to be in for another month of nothingness, just like this was. I mean, let me show you guys the effects of what we just had. All right, so take a look at this trading period. Do you see anything in the past 6 months as ridiculous as this, where we just went almost as there was a wall over here? The reason why it was so flat and so nothing and so boring is because the monthly velocity looked like this, okay? If the monthly velocity does not look like this, then we get price action like this, where we get nice swings up and down, easily tradable and bullish for the stock in general. The reason why this trading range looked like this, absolutely nothingness, just like almost like a wall on top of price, because of the nasty monthly velo. Now in the next 4 days, we can fully change this and have a really bullish November. So that's key. It'll be very interesting to see how that plays out.
Hey James, can you go back to the large screen, or like the full screen?
Yeah.
Thanks, bro. So what's really interesting about Animoy is it's such a great piece of the puzzle, because there's so many pieces in between Gavin's waves, the Animoy swaps and short interest and everything, including even Ortex. And so when we're talking about clusters, one thing that's really interesting is going back into May, you see this this massive run where there really is no cluster, right?
Was
on 24th.
Right here?
Yeah, there's like, if you put everything there, like put the other triggers on there.
So the thing is, I'm willing to bet that this was a 3-trigger cluster right here. I don't have access to that kind of data, but I'm willing to bet that this was a bullish 3-trigger cluster that formed right here, which took you to the daily trigger, pulled back a bit because of the negative daily velo, and then as the negative daily velo was at the end of the day, where the negative daily velo is weakest, price was able to move above the daily trigger, attack the monthly trigger, and remember during this month there was actually positive monthly velo, right? So it's expected during this entire month. This is something really important that I'm not sure a lot of people understand. When monthly velo is positive during the entire month, price wants to pull back to at least the monthly trigger.
Yeah, I want to share something with you too, though, because I think there's like, just from the Ortex side, I mean,
yeah, go ahead.
We could have seen this May thing literally coming right at us. So I'm gonna share, if you don't mind, just for 1 second, just to show that May 24th.
Not at all.
Okay, so hold on 1 second. Okay, so can you guys see? Okay. Okay, so the interesting thing about that May 24th move, James, is that it followed the 50% like to a T. So if we looked at May 3rd on the 2-week at a 12 days to cover, we know right around 6 days, that 50%, we see just a massive surge in buying or covering. And right as we hit the 24th, we were at 5.71, and then the next day we ran. So we dipped below that 6 point, and we had a massive run at that point. So yeah, we saw a lot of like sideways trading, and we started at 12 days to cover on the 2-week based on loan. And as soon as we started getting towards like the halfway point, it started going sideways, and then it dipped all at once on the 25th and 26th, and then found a home on the 27th. So I just thought that was interesting, that it was something that you couldn't really see coming. I mean, not that we can see the 1 in the 5 minute and the hourly from. Hold on 1 second. You guys all up? I got some notification that it's closed. Hold on 1 second.
I still see it.
Okay, I'll stop. I don't know why it's saying close stream. But I thought that was interesting because that was another instance of like maybe we could have seen a wave coming, and then we're looking at triggers to see exactly when you can like time, the bottom or when to jump in. So
Yeah.
that's all I got from that.
So if we go back to the 2 week DTC, with the volume that we had today, it's definitely on its way down. And I don't know if you guys all remembered, if whoever was on the stream last week, I want to show you guys something. Who were any of you guys on the stream yesterday? I mean,
I was on it, buddy.
all right. So I don't know if you guys remember, but yesterday I said that velocity breakouts exceed price breakouts, right? You guys remember that?
Yep.
So let me show you guys what I mean. All right, now this should be very interesting to you guys because I mentioned it last night and I said what we were looking for, and then we actually got exactly that today. You know what? Let me go back. Which view would be best?
I'm not sharing anymore, right? Like you guys can't see my screen.
Yeah.
No.
Can you guys share my screen? No, you can't. All right, 1 second.
James, I also sorry to interrupt, but I
No
also
problem.
remember you saying before that, like, typically when you look at velocity with certain other stocks, if you see like a flip to the positive side, even if it's like minute, that it might not matter so much for like other stocks, but it's seemingly because like of the volatility that like certain meme stocks experienced, that flip to daily today was actually pretty significant.
Yeah, I agree with that. Yeah, 100%. Okay, so this is what I was showing you guys yesterday, and I hope everybody like appreciates this and like, because I've been doing this for a long time with velocity breakouts. But what I showed you guys yesterday was that if we remove everything, okay, even price, and we just look at velocity. So I said to draw a trend line from this peak in hourly velocity and draw it down to here, and then draw it down to here, and then keep drawing. And I said when velocity breaks out of this trend line, all right, so just in your head, draw an imaginary trend line that here's your 1 point, here's your 2nd point, here's your 3rd
I
point.
don't know if you're sharing. Sorry, James. I don't know if you're sharing. I can't see anything.
All right, can any you
Yeah,
can?
I can see it. It's shown. You might have to cut out of your screen and then come back.
Yeah.
Right.
Okay. Thanks. Sorry.
No problem. Okay, so again, you just look at just draw an what's happening? Okay, draw an imaginary trend line from this peak in velocity. Here's your 2nd point of the trend line, and here's your 3rd point of the trend line. And maybe after I'll post on the Discord an actual snippet of this, drawing like a red trend line down from here to here to here. And I said when velocity breaks out of that trend line, that's when you're going to get a price breakout. And we did the math yesterday. Somebody on the live stream said that this was 0.17. So this was 0.14. This was 0.10. And he said 0.08 would be a breakout if you actually drew the trend line. And you see this print clearly broke out of that trend line, right? Everybody following? Or is this not making any sense?
Makes sense.
Okay, so as soon as you had your first breakout in velocity, you could see you had an actual price breakout as well. So usually this leads to some really nice continuation because velocity now broke out. And you have the same thing if you're a volume trader. Everybody knows like volume breakouts are real. Volume breakouts usually exceed price breakouts. Works the same with velocity. Velocity breakouts exceed price breakouts. So we've clearly had a velocity breakout, which means that this time period was really boring, right? In terms of very little volatility, a couple moves up and down, but nothing like we were seeing here, nothing like we were seeing here, nothing like we were seeing here. Definitely nothing like we were seeing here or here. All right, so we could count 1, 2, 3, 4, 5, 6 rather large pushes up over the course of May, June, July, August, 4 months. And during September, October, and now we're about to start November, there was no kinds of pushes like that. That's because velocity was forming, a downtrend. But now velocity broke out. So this can get very, very interesting. It can mean the volatility is coming back. It can mean the volume is coming back. It likely does mean that. And if that's true, then Paul, the DTC would continue coming down all the way until it breaks below the 50 mark, and that can set us up with a weekly trigger, monthly trigger airplane, and it could also set us up with an unbelievable macro switch with weekly and monthly velocity turning from extreme negative to, almost positive.
Yeah, and James, I think that what's crazy about the DTC right now is it's so high, really because the volume is so low. So we haven't seen numbers like these, in years, really. Looking at the 3 month over, 16 and a half days to cover. The 2 week is at like 26, 25 the other day. So any bump in volume can send this thing absolutely plummeting. So really what I'm looking for right now in volume to hit that, to see another May 24th type of event is for us to get 15 to 20 million in a day. And if we get that, I think we're going to see, 3 to 4 days, possibly more reduction in the DTC on the 2 week in a very, very short time frame. So it could happen pretty fast.
Yeah, I agree, and we'll monitor it closely.
James.
Yeah.
Just if you pull the monthly velocity again, I can. I don't know if we talked about this before, but I can show you something.
Yeah.
So usually when I see a nasty print like that on the monthly, but the month that print is for respects the previous low, which was 22 or whatever, that I consider that as a hidden bullish divergence, or you often see that in bottoms and tops.
Yeah, I understand what you mean.
You know what I'm saying?
Yeah.
Because what it's telling me is that the sell pressure was so large in August or September that there was a capitulation on selling.
Okay, that's actually brilliant. You're right. Honestly, I've been looking at this chart for a couple of weeks and did not notice that one. So, for anybody that didn't understand what Vinny said, and by the way, if you guys think I'm good with a Nimoy, Vinny puts me to shame. But essentially what he's saying is that during the month of September, the monthly velo was negative 1.3, and price came down all the way to 23.64. During this month, when the negative velo was negative 37, Nimoy was trying to tell us that price is about to get slammed into an abyss. And this is probably, it lines up with what Gavin was saying as well, a move down to 22. And Nimoy was predicting GME to get slammed, and GME did not get slammed. GME didn't even make a new low. So there's two ways to look at divergence. Price making a new low and velocity not making a new low, or velocity making a new low, but price not making a new low. So Vinny's saying that the fact that GME with such a negative print did not make a new low is inherently bullish. Correct, Vinny?
Correct. When I call tops and bottoms with MOI, I usually use the hourly velocity, and that's the same exact concept, but this is happening on the monthly.
Right.
Which is extra bullish for me.
Yeah, I totally agree with you. And, it's really exciting because if in the next couple of days, I just want to make sure I have the dates correct. Yeah, so, if any time before Monday, price can push up to $29.99, then we can see a significant move up for GME in November. We can see these kind of price levels again in November if GME in the next couple of days can close up here. You agree, Vinny?
I agree, because the 40C now looks way better than before. And that's what I'm seeing happening, to be honest with you.
The what looks better?
The 40C, the 4.3 request on the 6 month.
Yeah.
And with that hidden bullish divergence on the monthly.
Right.
That is how I'm interpreting. It makes a lot of sense.
Yeah, thanks so much for pointing this out. I guess I need to look for this more often. But you're right.
You see that often on the hourly on the day trader. You see price spiking, going crazy high, and then you're gonna get a new hourly print, right? And the hourly print is gonna be extreme hourly print. but during the hour, you won't see the price making a new high.
Yeah,
Or low.
we had that today on
Usually just wait for
BBBY.
Yeah, exactly. Usually just wait for a 3 across on the 5 minute, or 1 minute above or below the 5 minute, and it's usually a pretty good trade on that because that's calling a top or bottom.
Right. So, for example, right here, Nimoy was trying to tell us that as soon as price closed here, Nimoy was telling us that it thinks price is going to make a new high into this hour, and the fact that price didn't, that's inherently bearish. Right.
Yes.
Right. Okay. It's good to know. I hope everybody understood that, especially the guys that use Nimoy, because that is a very helpful tool. Okay. Anybody have anything else to add? Otherwise, I think I'm going to wrap it up right here. Okay, fine. Thank you guys very much for joining. Hope you guys learned something, and let's crush it tomorrow. I'll see you guys.